Hey guys, what's going on? Welcome back to another edition of my Robinhood portfolio. As you can see here, kind of a roller coaster day. Early in the morning here, got some good gains, then starting about noon and trending throughout the early afternoon, and pretty much up to close. I lost most of those. At one point down to $53, so I lost those early gains, had some losses, inched back a bit, but overall lost a little bit today. Overall, the market was down. You can see here a lot of red within my portfolio. Again, a lot of this has to do with the Pfizer Portola play. Don't want to dwell on that too much. But what I do want to talk about today is some of my bond funds down here. So, as some of you may know, there's going to be a big meeting tomorrow, a big announcement tomorrow would be more accurate, about interest rates. From what I've been reading, there's probably not going to be a rise in interest rates, but I think they're going to start preparing the market for rises later this year. And that has impact on my particular portfolio because I have a lot of bond funds down here. So starting with this Guggenheim fund here, and going through some of these PIMCO funds here, PCM fund. Here's that PIMCO fund. These top three here are junk bonds, and then we have a Blackrock core bond trust. Here the yield's a little bit lower, but these are more investment grade bonds as opposed to the junk bonds in those top funds, the Guggenheim, the PCM, and the PIMCO. And I have quite a bit of money stashed away into this Blackrock Income Trust. The whole idea behind this was that being a new investor, I didn't want to throw all my money into stocks right away, but I didn't want to have that kind of hanging out in cash, not making any return for me. So I threw a bunch of money into this investment grade bond fund, this BlackRock Income Trust. It's lost me a little bit of money with regards to the capital cost, but I've made that back in dividend reimbursements. You can see here the dividend yield is only 4.852, actually closer to 5. The Robinhood app here is a little bit off with some of the dividend yields. But nonetheless, it's a low return. The bond fund is investment grade bonds, so they're good bonds. But the problem moving forward is that should I be holding some of these bond funds in an environment that looks like it's going to be raising interest rates? So again, I'm a new investor here. I'm not an expert. From what I know about interest rates is that bond funds typically have an inverse relationship. That is if interest rates rise, bond funds typically move in the opposite direction. There's a whole complicated series of events why that happens, but a lot of it has to involve this thing known as interest rate risk. So essentially what this means is that as interest rates rise, the opportunity cost of holding a bond decreases. Since it's essentially investors are able to realize a better yield by switching to other investments that reflect that higher rate of interest rate return. So, for example, if I hold on this fund here, so this fund's at about 5% yield. So as for example, let's say the interest rate decreased. Well, the bondholder, after having already purchased this, would receive a fixed rate of return relative to the market, which is now offering a lower rate of return. So interest rates decrease, the bond fund would increase, and vice versa. The same thing would happen if the interest rate increases, which is looking like it's going to be happening later this year. So as interest rates increase, investors could go to different investments with a higher rate of return, so the bond funds here would decrease. And unfortunately, this particular income trust BlackRock fund is invested in a lot of long-term bonds, so the risk is even greater for this particular investment. You can see I have a significant holding here, $3,000. Overall, I only have about $7,000 invested, so that represents a very large portion of my portfolio. So the question is, what do I do here? So again, the announcement is going to be happening tomorrow. Really don't have any time to sell that today. Obviously, the market is closed. But tomorrow morning, should I start thinking about unloading this fund, or should I keep this for the long haul? Not quite sure about that. Again, I'm a new investor. I don't have a lot of experience in the market, so that's where you guys come in. I'd really like your thoughts about this. I'm leaning towards holding the bond fund, kind of writing this out. Like I said, I'm a new investor. Uh, Write it out, kind of see what happens. That may be a mistake. I probably should have been a little bit more proactive this last week, knowing that this interest rate hike is coming. Again, I don't know if they're going to raise it tomorrow. My impression is they won't, so I don't think there's going to be a lot of movement in the markets, but moving forward, especially later this fall, I think it's definitely going to increase. So I think I may want to get out of some of these bonds here. But again, I don't know. I mean, it's making a nice return. They're investment grade bonds. Even if that price went down a few more dollars, I've lost. Let's go back to that fund here real quick. With regards to my purchase price, overall I've lost $20 total return on that. But again, that's paying out about $15 every month. This is a monthly investment return. So if I hold this through January, I'm going to make back that return. Obviously, only being a 5% dividend yield and having the price go down. Even if this goes down another $20, it's going to eat into my return. But it's not like I'm going to be losing a lot of money. But again, the whole point of investing is to make some money, so that might be better served by liquidating that particular bond fund and putting that money into stocks. But I don't know. So again, let me guys know what you think. Again, new investor here. The whole idea behind posting these videos is to get community involvement and trying to get together some investors that can help guide me through this process. So again, I think these videos are fun. If you like it, give me a thumbs up. I really appreciate it if you subscribe. That would really help me out. And again, give me your thoughts. Should I stay invested in this particular fund? Should I get out of bond funds altogether and put that into stock? Should I put some money over into cash and kind of wait out some of the market volatility here? With the election coming up, the interest rates unclear if they're going to be rising, how fast they're going to be rising. Maybe my money's better suited on the sidelines, just sitting in cash and then diving in later this fall or even early next year. So not quite sure about that. So anyway, let me know what you guys think. Again, thumbs up, subscribe, leave a comment, let me know what's going on, and I'll see you guys next time.